Okay, so in this video, I'm going to explain tips and tricks on how to deal with the range bars and super trend indicator in real-time trading long term. Now, this is important to understand and start building a track record so that way you can trade profitably. You also need to understand that it's not a get-rich-quick scheme. You can't just start having a few $1,000s a day because you have a $1,000 balance. You actually have to be risking very small percentages and get into the habit and the flow of the market and how things actually move. So with that being said, it takes a lot of time to practice. You should put in a few hours a day or a week as much as possible to get used to market flow and patterns so that way you understand how to trade profitably. Now, the way we do it is that first we look at the range bars. Let's look at BTC right here. This trade already happened. So this downtrend already happened somewhere. As you can see around here, it went down and now it's here. Now, with the dot signals, it's a buy right now, but we're not taking that. We're just going to explain tips and tricks with the range bars and the super trend. The super trend is on the BTC chart like this. And then with this, we match it with the range bars. Now, once this candle closes up here, we are going to enter a sell trade if the super trend is also a sell. So the range bars determine our entry and the super trend determines our direction. Now, a further thing that we can do is check all of the super trends on all the different time frames to find out the one that's the most averaging. So, for example, if we go to M1, M5, M15, so on and so on, and we discover that the one that occurs the most is a buy trade, then the overall trend is a buy. For example, M1 is sell, M5 is sell, M15 is sell, sell, buy, and buy. So that's 1, 2, 3, 4, 1, 2, 3, 4, 5. So the overall trend on BTC USD, as usual, is a buy. So we may only be taking buy trades once this range bar closes up here. And now the last thing that we add is entering a trade after the first trade fails to create like a catapult effect on our equity curve long term. What that means is that once a trade is signaled, we may just watch it as if we entered, but not actually enter, let it go by and see what it does. If it fails, then we would enter on the following trade. What that does is create like a catapult slingshot on your equity curve because instead of drawing down, you would have just went up. It would look something like this. On your equity curve that's moving up and down like this over time, instead of us going down on that trade, we would have just went up. And what that does is it creates a more smoother equity curve because you're skipping a trade. And then one more tip to understand lot size and risk management is that once you're trading with larger lot size, in this balance, you see we have a live account over $130,000 that's done over 30% growth in the past year. There you go. Then you can diversify your risk in that trade. What that means is that instead of going all in on this trade with 5 lots, as I would be doing if I was trading this right now, I might do 0.5 on this trade and then 1.5 once it pulls back a little, and then the other 2 once it pulls back a little bit more. And that also creates an averaged out slingshot on equity curve once that trade goes back up because we're averaging into the trade. And now because we have a 1-to-1 ratio, instead of us losing this negative 500 on that 5-lot trade, it may be that we entered 0.5 here, another 2 there, another 1 there, and then we didn't even get the remaining 3 or whatever, but then this pulled back and went up, and because of that slingshot, we ended up with this extra gain and we minimized our risk because we averaged in on that trade. And that's the smart and efficient way of using lot sizing and risk management to start learning how to trade at an advanced level. So again, the first thing we look at is the range bar close of the candle. See this with this close or this close, this close, this close, this close. The first candle close to determine the entry of the trade. And then we use the super trend to determine the direction. We may look at all the super trend variations to average out the one that's occurring the most and take that one. And then lastly, lot sizing and averaging into the trade. Instead of going all in at once, we may do burst orders along the trade to reduce our risk and potentially amplify our results. Remember, go to akapwc.com to watch all the training vids in the Skool community. They're all free. Treat them like you spend hundreds of thousands of dollars to get access to them because they take you all there from beginner to learning how to make your own automated trading system and practicing that every single day. Do it right away, get started, click the link, and let's go. I hope this has been a helpful video. This should be practiced long term, and you should consistently focus on creating a track record with the systems and indicators and conservative risk management over time to get good at trading and turn it into a business for yourself. We've made millions of dollars in our trading account now over the past few years and are growing continuously. And this did not come overnight. So it's important that you learn how to do that properly. And you can start actually having a business that makes you income over time as a result of learning these skills, where you can start having those days like we do, where we're doing five to $10,000 a day every few days. You got to build up to that point and start small. Remember, go to akapwc.com to watch all the training vids in the Skool community. They're all free. Treat them like you spend hundreds of thousands of dollars to get access to them because they take you all there from beginner to learning how to make your own automated trading system and practicing that every single day. Do it right away. Get started. Click the link and let's go. With that being said, have a great day and we'll see you soon.